Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the head of commercial applications at Trilitech and the product lead of XU308, a digital platform that powers your ownership and trading of physical uranium available at uranium.io. It's Ben Elvidge. Great to have you on the program.
Great to be here, Jesse. Thank you for having me and appreciate you making the time to squeeze us in.
Absolutely. And I definitely want to dive into XU308 in just a moment. But first, I'd like to get your thoughts on the overall macro picture for uranium at present, because there's just so much bullish news flow constantly hitting the headlines at this point in time when it comes to both nuclear energy and the uranium market. I want to dive into some specific stories in a moment. But first, what is top of mind for you right now when it comes to the uranium industry, nuclear energy, and the catalyst driving the market?
Yeah, look, I think it's a great intro and framing question. I think you're absolutely right. I think the narrative shift and policy shift that we've seen over the last decade back towards nuclear as a viable and realistically only option to meet the energy demands of society going forwards, particularly with AI, particularly with increased energy consumption from all facets of daily life, means that combined with the kind of policy goals around decarbonisation, realistically the only proven solution is nuclear. And what you're seeing is that structural shift play out at pace now with the new administration or not so new administration now, but the kind of Trump administration that's coming in the US have been very pro-nuclear and sort of not just nuclear, but also uranium and uranium exploration from a US perspective. That drives a lot of additional attention, of course. But globally, that demand growth has been there. We see that the 60 plus reactors are under construction already, notwithstanding every week, seemingly, new reactors are being greenlit globally. China's building out. And what's really interesting is we're seeing not just new reactors, but extensions of existing reactors, but also wholesale shifts on nuclear policy. Japan right now. Japan's a great example of that in terms of obviously post Fukushima, the impacts of that meant that nuclear was sort of deprioritized. That policy shift in terms of reinvigorating or restarting the nuclear program in Japan is very much underway, and the same in Europe and Germany as well. All that being said, the demand side looks very healthy and very bullish and very strong. At the same time, we're seeing a couple of challenges on the supply side and structural supply tightness, right? So whether that's not just the fragility in the supply chain given impacts of Russia, and we see them Russia have extended that unfriendly countries or not dealing with unfriendly countries kind of policy once more for another couple of years. Obviously, from a sanctions perspective, the Western world is not dealing with Russia either. And so you're seeing this geopolitical reshaping of the supply chain. So reducing that dependence on Russian conversion enrichment in particular, and then the ramp up from a Western perspective of that. But as many of your listeners and followers will know, the supply side takes a while to get up to capacity. It's had a lot of underinvestment historically. New mines are slow and costly to develop. So actually, what you've got is this perfect storm, really, where we already know from reporting last year that there was a demand and supply gap to fuel the current fleet of about 50 million pounds of uranium at a base material level. If demand is going one way, something needs to happen on the supply side to increase that. But if you're looking at it from an investment thesis perspective, the sort of big picture takeaway is really demand rising, supplies constrained, and policy and geopolitical perspectives are accelerating that bullish uranium outlook. And that's being further fueled by engagement of the private sector, the big tech companies primarily, also investing in nuclear capacity, as well as further down the supply chain as well at some point, we expect.
That's a great summary. And speaking of supply squeezes, Kazatomprom, the world's largest uranium producer in Kazakhstan, continues to put downward revisions on production guidance, now stating they are set to mine at least 8 million fewer pounds less than their original production guidance for 2026, with the biggest producer facing these type of production shortfalls. And we're also seeing many other projects around the world facing issues. Where is the needed uranium going to come from, in your view?
Yeah, look, I think first and foremost, let's not downplay that Kazatomprom cuts absolutely matter, right? They're making cuts into to their revised output or revising down their output for next year is absolutely it's a big thing, but they're not the only ones, right? We see even this year that Cameco have revised down some of their estimates of what they expect to be producing as well. And so I think it just highlights that structural fragility that I mentioned in that, you can run all of the reports and diagnostics you like, but there is an operational execution aspect, which means that expected supply is always going to be subject to the ability of you to execute on that kind of mining project, for want of a better phrase. Um, at the same time, these other producers, Cameco, Paladin, Orano, that they're facing ramp up challenges, cost inflation, of course, some of the regulatory hurdles. Admittedly, the US administrations are focusing on that, is doing its best to try and support and reduce some of that burden. But again, that takes time to get through Congress and get approved and everything else that goes around that. So near term, that supply gap is going to continue. Um, that's further exacerbated because secondary supplies through inventory drawdowns, sort of reuse of depleted material, sort of underfeeding it enriches help, but that's being limited to a certain extent because it's being used more and more as these revisions come in. Um, and the mining expansion we talked about in the previous question, I think that is going to come through, but they take a while to restart or get up to speed and sort of reach capacity. And it's very capital intensive, and that's one of the reasons that I think XU308 is interesting, because how do you attract more capital to an asset that's historically been illiquid by creating more of that flexibility around the way to express that thesis? And we can get into that in more detail, but I think long term, it's going to need a lot of investment in the sector to sort of bolster that supply. That's not quite there. So, what that's meaning is that utilities, and we look at it right now, and you look at the replacement rate and the way the spot prices move now, the spot's now, as we're talking today, above 80 or just slightly above $80 per pound. Utilities have got a question that they need to start asking themselves, right? Where when spot and term prices are at a similar level, actually, how do we best manage that operationally as a utility? Do we still continue with these aggressive long-term contracting policies that tie us in, or actually, given some of those near-term and medium-term constraints and the price parity between spot and term, do we need more flexibility to be able to express a view, ensure that we've got the right amount of material right now to support our near-term requirements, and look maybe a little bit further down the line at the longer term contracting. So it is an interesting time in the market for sure. And of course, Sprott is out there raising money hand over fist when the market's bullish the way it is, and that they obviously take pounds off the market, so potentially could exacerbate that problem.
Absolutely. You spoke about Russia extending its ban earlier. They have extended their ban of enriched uranium exports to, quote, unfriendly countries for an additional 2 years. This is out to December 2027. Waivers can, of course, be granted in certain situations, but this certainly puts a strain on the uranium supply chain. How much do you think this could affect the market overall? And do you think we will eventually see more enrichment and conversion capacity coming to the United States and other Western nations?
I'm not sure we have a choice than other to figuring out how to attract that capital to increase the capacity of sort of enrichment um, and supply on the Western world rather. We don't really have a choice because even regardless of, and I don't have a crystal ball, but regardless of what happens in regards to sanctions regimes, that we're living very much more in a polarized world, and those negotiations will take time. And you look at the relationship between, from a geopolitical level, Russia and the sort of recent summit with India and with China, they're not necessarily needed to come to the table as it stands right now. So they have up to 40, close to 40% of the world's enrichment capacity. So if we're, big ambitious goals have been set, which is great. It's great for the industry. It's great for us as a project operating in the industry that governments like the US are setting big ambitious project goals by short-term targets like 2030. Um, but that does put pressure on utilities, on suppliers, and on also on the governments to attract that capital into the sector to build out those enrichment capabilities. You've got three converters in the Western world in Cameco, Orano, and Converdyn. There's only so much they can bring online without substantial investment or adding other firms into that mix to be able to sort of meet that worst case scenario 40% shortfall in enrichment capacity. So I think it absolutely has an effect overall further down the supply chain and exacerbates that demand and supply gap I mentioned before of £50 million in 2024. That was just for U308, so just the base pre-enrichment. You then factor in the timelines it then takes potentially when you've got bottlenecks with enrichment capacity. It it can be if you're sat in the seat of a utility or a fuel buyer right now, it's probably a pretty scary situation looking down the short term picture there. From an investment perspective, there's obviously another thesis you can have about the impact that that potentially has.
Well, speaking of Russia, they have announced plans to build 38 new nuclear reactors. This is in addition to China planning 150 reactors by 2035. We are now seeing America stepping up, as you touched on earlier, passing legislation to get more reactors built, as well as to incentivize domestic uranium production. We seem to, like you said, each week we're seeing new countries that are planning or in the starting the construction phase when it comes to new nuclear reactors. It wasn't that long ago that nuclear energy was completely vilified, and now the tables have totally turned. What are your thoughts on this flourishing nuclear renaissance?
Yeah, I think it's a great way of framing it in terms of a renaissance from a nuclear perspective. It's pretty remarkable given it's about a decade ago that nuclear was sort of almost the villain in energy production. Um, and now, you've mentioned some of the stats there. So 38 new reactors in Russia, 150 by 2035 in China. The stats are, and that's not accounting for the innovation that's going on in the marketplace around small modular reactors and advanced reactors and what that might mean in sort of bringing even more reactors online within that. These are just the sort of more traditional large scale reactors. Um, so, I mean, the drive is pretty simple though, right? If you want reliable baseload energy, energy security, and just as close to emission free as possible when fully operational, nuclear is really the only answer. And so that's why I think it does feel like a true renaissance in that regard. I think the geopolitical dynamics from a demand perspective in terms of energy consumption, but we haven't really talked about energy security. And as the world becomes less globalized, rightly or wrongly, that's for other people to determine. And you can make an argument either way as whether that's a good thing or a bad thing. But it's undeniable, therefore, that energy security is important when countries are operating under their own steam. That you want the best pound for pound energy production out there, and nuclear is proven to be that at scale, particularly compared to other low emission alternatives like wind or solar. So I think this bullish trend is here to stay. I think inevitably what we'll see is some horror stories at some point, I expect, of people raising capital and coming up with ideas that maybe aren't kind of as fully fledged as they could be, as is the case with any market that's in high demand. But I think it's certainly an exciting time to be operating in this space.
I want to shift to XU308 and how it fits into the picture now. We're going to dive into the details of the platform in just a moment. But first, some very exciting news. And that is you've launched the world's first live uranium spot pricing oracle with a price update every minute. This is pretty amazing because previously the spot price was very hard to track, infrequently updated. Walk us through how this system prices uranium. How did you create it, and what are its implications for the uranium market?
Yeah, so the advantage of being sort of Trilitech, and we're a research and development hub, and so we're fortunate that we have a lot of great software engineering and quantitative talent, and so that have got pedigree in big investment banks and the like. And so actually, what we've done here is some heavy duty analysis around while the spot price for U308 and therefore uranium is printed and fixed sort of daily. There is some more frequent feeds that you can get that sort of print every 20 minutes or so during US and UK market hours. There's nothing much more than that. And so consequently that creates a bit of a problem for attracting large scale capital that you would see in other markets and other asset classes because you don't have a clear benchmark or reference price. So we looked at that problem and we did some heavy duty analysis around, while that price is hard to get at, actually uranium doesn't operate in a vacuum. And so there are plenty of listed vehicles and listed miners and adjacent assets that have some level of correlation with the price of uranium if you look at it on a daily basis, but trade live. And therefore, you've got even small relationships and small correlations with assets that trade 24/7 through the cryptocurrency assets. So leveraging all of that great quantum software engineering talent that we have, I don't want to give too much away, but in short, we built an algorithm that takes inputs from those correlated assets with various levels of correlations, as well as inputs that we can get on the price of uranium, so those more frequently pricing feeds, and then comes up with an estimate. And then as part of that, we do take in the uranium price. And so we're able to benchmark at any given point in time when we get that reference price that's presented out to the market, whether that's daily or slightly more frequently during US and UK market hours. We're able to ascertain how far off the mark we are. And pleased to say we haven't really been off the mark at all. It's been minimal, if anything. And so it's great that what we're seeing now is actually big commentators and influencers on the uranium sector referencing, we only launched this last Tuesday, referencing alongside, what they're seeing in terms of bid asks from brokers and things, referencing our price feed as another example of where the spot price is at any given point in time. And we think that's kind of another barrier. If we think about what we started XU308 to do, was to break down some of the barriers to investing in uranium as we saw them, and be able to, because those barriers have been broken down, attract capital to the sector that's critically important, and make it more easily accessible for the average investor. A clear reference price that's transparent and freely available and prints every minute is something that we think is going to aid more people in feeling comfortable to make allocations to uranium. What we
And
eventually hope,
people,
sorry,
yeah, go ahead.
no, I think what we eventually hope for is, that the XU308 token or asset is traded enough that becomes another input into this price feed, and we can become the market through the trading of XU308 and getting those volumes increased in the trading of the asset itself.
And so for people who want to view this price feed, they can find it at uranium.io.
It's price.uranium.io, but yeah, you can get to it from uranium.io. But you just put a price.uranium.io and it's there and available and updates every minute.
Great. Well, let's break down the XU308 platform for people out there wondering, okay, I want to invest in physical uranium. What separates your platform from an ETF like the Sprott Physical Uranium Trust? And obviously, people have concerns with validating the authenticity of uranium holdings, ensuring the physical pounds they see on their screens are stored somewhere and assigned to them. You did a whole interview about this with our friend Lucian at Triangle Investor discussing this topic. So I definitely recommend people pop over to his channel if you want more details. But could you break down the highlights and answer those concerns in addition to just kind of giving us an overall overview of how the platform works?
Sure. Look, I think, the concerns are valid in the sense of there have been previous attempts at using blockchain technology and tokenization as a concept in the uranium market a few years ago. I think that's been well documented in terms of some of the pitfalls or failings of that, not least the fact that you didn't have the physical pounds in storage, but purported to be having the physical uranium there. To that end, we went about it from the opposite perspective with XU308 and very much started from the regulatory and legal standpoint. So actually, how do we really improve what this is about improving the market infrastructure around trading spot uranium. It's not about creating a new asset that's then investable. And so to that end, when you hold XU308, that's actually your beneficial ownership of physical pounds held in storage at Cameco, which is one of those three facilities I mentioned earlier. And we publish our monthly statements of the pounds that are in storage at Cameco on our website, again, uranium.io. You can see, if you go to proof of reserves, which is at the bottom of the page, you can see the monthly statement, so people can be rest assured that the pounds are there. And then your XU308 holding is proportional to that amount. So We have £100,000 in storage. We minted 1.6 million tokens, so each token is worth an ounce of uranium as it stands right now. And the really important thing about the legal structure is we've used a legal framework that is hundreds of years old in sort of common law trust frameworks that basically means that's an insolvency remote structure. So we have a regulated trustee that's sat there kind of operating, for want of a better phrase, the register of holders, which is the XU308 holder list that's on the blockchain. Um, but but essentially there's no other intermediary in there. And so the really important factor there is if you had a big enough position and you had an account with Cameco, a storage account, you could actually instruct physical delivery. And so you could say to us, I want to burn my tokens, and actually I want you to deliver the physical pounds into my Cameco account, please. Which we think is a dramatic difference to previous attempts where it's been based on forward sales agreements and things like that, and sort of it's not an invalid use case by any stretch to want to use tokenization to raise capital, but that's not the same as giving people and creating better market infrastructure around an opaque market as it stands right now, which is where we've come at it from. And legally, it's enforceable because that trust framework is super important, because under English law, putting the blockchain rails to one side and blockchain technology to one side, under English law, you can assign your interest in a trust to another individual with a written instruction and a signature. And it's broadly accepted precedent that blockchain transfers, and then because you sign the transfer with your wallet and you actually have to confirm that, and that counts as a signature, that is accepted practice. So we've been able to take legal frameworks from centuries ago and apply them to a market using modern technology and modern infrastructure to what we hope is eventually move this market forward, where XU308 becomes the primary mechanism for trading spot uranium, because you can do everything you currently do by phoning up a broker, filling out a book transfer form, etc., but you can do it all in a much more seamless way and without at smaller lot sizes than the 50,000, £100,000 minimums that we see in the current market.
Great breakdown there. The platform launched very recently in December of 2024. You've kind of, to many, feels like you came out of nowhere, and you're kind of taking the market by storm in terms of offering this digital alternative for people who want to invest in the uranium space and have access to physical uranium directly. Talk to us about the progress you've made since you launched the platform and what you're most excited about in terms of the milestones you've achieved.
Yeah, I think, like with any new product launch, I think we have big ambitions, and, it starts small, and then we've really started to gain momentum since the start of the summer, I think. So, you know, our average holding is it's close to $600 now, which is great because we wanted to target and bring more retail investors into this product, and we're absolutely doing that. And I think in terms of highlights, getting listed on three exchanges was a big achievement and took a lot of work, and being able to pull that off on a single day in July, and kind of have three exchanges go live at the same time without it can have $1 million in trading volume on that first day. I think that's probably a pretty big highlight for me. It took a lot of discussions to get to that point, but once they understood the structure and that it wasn't a different kind of asset, it was just spot commodity trading that happened to be on blockchain rails. I think these exchanges, which are crypto exchanges, got very excited. And I think that's meant that we've been able to open the door to lots of conversations with more traditional investment platforms, where commodities and traditional commodity structures like ETPs are traded more frequently, because, as I just said, this isn't about a new asset, a new crypto asset that changes the profile of it. It is just easier spot commodity trading than you have by doing things OTC. I also think the other big highlight for me, as I look back over the past almost a year, that's a sort of 8-9 months now, was sort of getting our membership of the World Nuclear Association and being at the World Nuclear Symposium at the start of September. It's a big endorsement, because for any of you sort of listeners and followers that don't sort of know about the World Nuclear Association, it's not just a case of paying a membership fee and you're a member, right? You actually have to they vet you and validate you with other existing members. And so actually being able to get membership on in the first place was great. But then two, being at the symposium at the start of September, having our kind of stall there, and being able to talk to the industry directly and the primary actors in the industry was a big highlight for me, because it was overwhelmingly positive. Of course, with anything, there are skeptics, and it's great to be able to have these conversations and address some of those things head on. And you mentioned Lucian earlier, and we did a great follow up with him a couple of weeks ago, addressing some of those direct feedback points, because we want to be transparent. We want people to really understand what we're doing and see the benefits of what we're doing, and we're happy to have those conversations. So being able to do that in person and face to face was great. I also think it opened up lots of interesting avenues of future development and opportunity, which is really exciting as well.
Well, now looking forward to the future of XU through oh 08, what are your plans for the remainder of 2025 and into next year? And what do you think uranium investors should be paying attention to when it comes to the platform up ahead?
Yeah, so I think I might kind of answer that in reverse order almost. So I think you mentioned Sprott earlier, and I think it would be remiss to not talk about it, right? As the primary mechanism most people will use to gain exposure to uranium, and how this is different. So I think in terms of paying attention to the the bullish sentiment is great, but that obviously attracts a lot of different kinds of investors, and a lot of that has gone into Sprott. And I think the reason uranium was interesting as an asset class for tokenization, as we saw it, was because some of the challenges, not just in the physical market with the high barriers to entry. If you take £100,000, that's like what, $8 million on current spot, but also some of the inefficiency with a vehicle like Sprott, which is a closed-ended investment trust. And so, it actually, with its closed structure, and it is even more of an institutional vehicle, really. But the most important point, as we saw it, is, and you've seen this play out over this week, with all this bullish sentiment, is the premium and discount, because it is a closed-ended investment trust. And so actually what you're seeing is much greater volatility in Sprott than you are in the underlying uranium, one. And two, you're not necessarily, particularly over short-term horizon, seeing the efficacy in tracking the underlying spot price. So just as an example, right, the premium to discount swings, even with positive sentiment, and we know that spot uranium is up and likely to be up again today if I'm looking at our price feed. But, it closed the day on Monday at a 4.01% premium to NAV. And yet yesterday it closed at a minus 1.28% discount, because it's got a lot of cash on the balance sheet, or for whatever reason, right? And I think that is the challenge with if I think about what uranium investors are paying attention to, you've seen for the past week, all the uranium mining stocks globally move into very bullish territory. But again, with anything where you don't have the direct access to the underlying, you're picking up all kinds of other effects on that, and whether that's US equity, Australian equity, market beta effects, whether that's the premium discount effects for investment trusts more broadly. Whereas what we built for tokenized uranium is just direct exposure to that spot price. It's fractionalized, transparent, it's available 24/7 and globally, as long as you're not sat in a sanctioned country. And so our key focus for 2025 and 2026 is really about scaling liquidity, the exchange integrations, and the market access, particularly for those in the supply chain as well, because a lot of SMRs aren't going to come online next year, but actually being able to prove that you can have a market that is more flexible, can trade in smaller lot sizes, does make it interesting for the innovation around reactor technology, because they need flexible, smaller contracts. They don't need these big long-term contracts that the sort of traditional reactor model goes on. So big picture, I think what we built with XU308 is positioned to serve both financial investors at the retail and institutional level, and the evolving physical fuel market. And next year is all about building upon the momentum and the foundations that we've had this year. So, we're looking at financial products like a swap product for institutional investors that can't hold tokenized assets right now. We're looking again at how we can use that price feed as it gains more traction and validation for the financial products. So perpetual futures, things like that, that trade 24/7 and settle intraday, becomes quite interesting. I think also what I expect we'll see before the end of the year, I hope, is that because we are on blockchain infrastructure, it makes adding additional utility to holding uranium much easier. And what I mean by that is, if you hold XU308, what we hope to be able to offer holders of XU308 before the end of the year is that they'll be able to borrow against that. So they'll be able to borrow US dollars and use that uranium as collateral. And from a protocol or business perspective, in terms of the ones lending, absolutely you'd want something like uranium that's high quality, very bullish sentiment, but has about 10%. It's got about 10% higher volatility than the S&P 500. That's much better than some of the crypto assets that you would previously be taking as collateral. So I think that's really interesting. And then from a primary active participant perspective, the one thing that's going live next month is we currently support this. So the sort of, I mentioned the redemption piece, but also the tokenization of existing inventory. We can do that very manually right now with the legal structure and our trustee. But what we'll launch next month is that in app. So if you've got a small amount of inventory, say 10,000 or £20,000, you need to wait until you build that up to be able to trade a minimum lot size, right? As it currently stands. What we're offering people is the ability to tokenize that inventory, transfer it into our Cameco account. They'll receive XU308, which is their proportional ownership of those physical pounds in their digital wallet, and then they can monetize that or sit on that, do whatever they want to do with it in the secondary markets. And it's traded on 4 venues right now. So we think that's something that's really interesting in sort of bridging some of the challenges with those involved in the physical market as well. So it's a lot on our slate, but we're very excited about what that can become.
Well, this has been a fantastic conversation, Ben. You've shared so many great insights into the uranium market and XU308. I'm going to put a link in the description to uranium.io, as well as your new pricing oracle and your account on X. You post a lot of great content there, so I recommend people follow along. Thank you so much, Ben, for coming on the show.
No, thanks for having me. It's been great to be here.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.